Hello, hello. Welcome to our first episode of College of Business, University of New England podcast / YouTube channel. My name is Dr. Golshan Madraki. I'm Associate Professor of Supply Chain Management in College of Business at University of New England. My expertise and my research is focused on the applications of AI, algorithm, graph theory in different domains such as supply chain, finance market, manufacturing, and so on. And today we are here with our amazing host, Andy Brenner.
Thank you, Golshan, and happy to be here. My name is Andy Brenner. I've been on Wall Street for over 30 years. I'm a regular on CNBC, Fox Business, the Schwab Network, and Bloomberg. I talk about business. I talk about what's going on in financial markets. And given that I've just been made the chair of the advisory group of the Business School of the University of New England, I thought I'd use some of that expertise to help promote the University of New England, as well as to give University of New England followers an update on financial markets.
Thank you so much. Just for your record, today is September 18, and we are going to talk about what is happening in this world in US, and I'm going to start our first question. So, Andy, what happened yesterday? What did Fed do?
Well, you know, one of the biggest movers of markets is what the Federal Reserve does on their 10 meetings of the year. And yesterday was a very interesting one in that you have a lot of pressure from the administration to try and lower rates. You have a lot of dissension within the Fed as to where they want to go. Some think that inflation is more of a problem than employment. Some think just the opposite. Fortunately, Chair Powell is one of the believers that the employment situation warrants multiple cuts by the Federal Reserve. And we saw the first of those yesterday with 25 basis points. There was one dissension, but basically Powell was able to corral the group to make one determination. So what we have right now is a problem in this country where the employment reports have been misstated just because of the backwardness of how the Department of Labor has been doing things. And as they've been getting revised, it's showing a much weaker U.S. economy, which the Fed is starting to get very concerned about. So we expected the Fed to lower 25 basis points yesterday, and that is what they did. And we expect them to lower two more times, one at their meeting in October and one at their meeting in December. So that will bring interest rates down another 50 basis points from where we are today. That's going to have a profound effect on all kinds of financial markets, from the dollar, from equities, from small caps versus large caps, from banks. It's going to have a very big effect on interest rates, whereas many think that just by the fact the Fed lowers interest rates, it means all interest rates go down. And that isn't always the case. Last year, the Fed lowered by 50 basis points and long-term interest rates went up 90 basis points. Now, I don't see that happening this time, but nonetheless, you have to be concerned about that. So we think it's important for us to talk about the Federal Reserve, rates, markets, and all things that are affected by the Fed.
Oh, thank you so much for this. And do you think it would be concerning for the economy? What would be the risk for the economy of U.S.?
Well, the economy of the U.S. right now is showing a little bit of delayed inflation. Some might argue that if you go into a grocery store, inflation's much higher, and that certainly is evident. But because of the tariffs that are implemented by the president, and as they're going into effect, and as people are trying to figure out how to minimize the tariff situation, we're getting a slight uptick in inflation. However, the Federal Reserve, the interest rates, are still, even with the Fed cut yesterday, are 4.25%, 4%. And inflation's running about 2.75%, 3%. So we think that the Fed can lower rates by at least another 50 basis points. And that's what we believe they're going to do by the end of this year. The problem is that I see markets right now is equity markets have been on a roll for the last year or two and setting new records, maybe 25, 27 times this year. And they're all very high, and people are very loaded up on equities. Similar with interest rates, people are very long bonds. So we think there's probably room for a corrective move, but I still think I'm very positive on the U.S. economy and very positive of what the Fed's doing, which is basically a risk management cut as they defined it. And I think Powell's on the job.
Thank you. So you believe that we are on a right path, and you're very hopeful to this movement.
Absolutely. I think that while inflation is a concern, the overwhelming problem is the employment situation. We've basically gone from an economy that was creating about 150,000 jobs a month to an economy that's barely creating any jobs a month. And that's a big concern to the Fed now that they've gotten the right numbers. They've been looking at wrong numbers, which we've been pointing out in our commentaries throughout the past year, pounding the table that the unemployment numbers coming out of Washington were very delayed and just weren't right. And now that's coming to fruition. And the Fed's on it. And the Fed has room for another 50 to maybe 75 basis points of cuts before they have to still worry about inflation. So we think the Fed's on the right path. We think Powell will do the right thing. And there's a lot of concern right now about the Fed and their independence. But with Powell at the helm right now, things are still very much independent. And even though the president would like to see interest rates hundreds of basis points lower, that's not going to happen in the near term. And I don't think it's going to happen in the long term either without a major recession, of which we do not forecast.
Wow. Yeah, thank you. So one other thing that it came to my mind is that, do you think that Powell could also consider like half instead of a quarter of the cut?
There were plenty of people that felt that Powell should lower 50 basis points, but he made a deal with two of the senior members of the Fed, Waller and Bowman, that they would not dissent with a 25 basis point cut if he said that he would try to push two more cuts through this year. There was the newest member of the Fed, Steve Myron, was the one dissent, but he's really there as the president's plant in this, and he's not really, a Fed governor, even though he officially got the title just this week. So I'm not too worried about Myron, and I think he's going to be a short timer, given that his term ends in January. So yes, there was a lot of talk about a 50 basis point cut, but there are still people on the Fed that are more concerned about inflation than they are about employment, and they didn't want any cut at all. So I think Powell did a very good, acted very well as a mediator between those that didn't want any cuts to those that wanted even more cuts. And I think the Fed is stable, and I think the Fed is on the right path.
And doing like an independent job from the White House.
The Fed is still doing an independent job. I get asked the question all the time, am I worried about Fed independence? Right now I'm a little bit concerned, but I'm not fearful. I believe that with Powell will continue to do what is right until his term ends in May. And I believe that Powell's going to stay on after his term ends and finish out his actual term as a Fed governor, which doesn't end until January of 2028.
Fantastic, thank you. One more question for you, Andy. What do you think that about the risk to the U.S. economy and the world economy?
Golshan, I'm very concerned about how the economies look out over the next year. There's a lot of turmoil going on. There's still, a lot of tenseness between China and the U.S., even though right now it's at a lower level. You still have the war between Russia and Ukraine, which could, bring in more of Europe. So I'm concerned about a lot of those things. But as far as the U.S. economy, the things that still bother me is the tariffs, but that situation seems to be behind us now. At least that's what I'm hoping. So one of the things that bothers me is how far can interest rates go down? And I think probably 3.25 is about as low as I can see them right now. What's going to happen to the U.S. economy? I think the U.S. economy is good. One of the things I look at is AI and the amount of money that the Mag 7 and others are putting in and trying to keep the economy going and building up AI for the future. And AI is one of your expertise too. So you might want to add something on that. And the amount of money that I'm seeing spending on cloud creation, the amount of money that's being spent on Oracle products, Google, and certainly NVIDIA and whatever. And even the big event today where NVIDIA just put 4 or 5 billion into Intel in order to stabilize that. I'm very positive, and that will continue to keep the U.S. economy going, even if the consumer is in trouble. The way I see it, about the top 20% of the U.S. wealth has done very well because of their involvement in the stock market, involvement in the bond market, or involvement in risk markets. But the bottom 80% is not done as well. And that's going to be a struggle. And I think that lowering interest rates is the first step in helping that happen. So we're hopeful that Powell understands this. I think Powell's going to be a good governor. I think Powell's been a great chairman. I think the next Fed chairman is going to be good. I'm not really sure whether it's going to be Chris Waller, who we have the utmost respect for, or it's going to be Kevin Hassett, who's a good guy, but I'm not really sure that he's the right guy for that particular job. So I'm a little concerned about what the Fed's going to look like a year from now, but I still think it's going to be independent. And I am concerned about the U.S. economy and the debt and the dissension within D.C., but I am somewhat positive as to what the outlook is. As far as the world goes, I'm not a big fan of Europe. Never have been. Europe has had a very good year this year. I mean, I looked at the Spanish stock market today. It's up 31% year to date. It's a pretty good move, but I'm still very much concerned about, the European work ethic in the European markets, but I'm very positive on Asia. So I think between the U.S. and Asia, I think we're going to be in great shape, and we'll have to see what Europe does. And as far as emerging markets, when the Fed lowers interest rates, the dollar goes down. As the dollar goes down, that helps emerging markets because emerging markets are always usually a net dollar importer. So we think that that's going to help the emerging markets, but we still like Asia and we like the U.S. And we're going to take a pass on Europe for the time being.
Fantastic. And one question occurred to me. So basically, people think about tariff and the direct impact on inflation. But do you agree with this statement that tariffs obviously have impacts on inflation, but the impact would be one-time thing? Do you think that's a correct statement?
Well, the Fed has said they view tariffs as transitory. That's a word that got them into a lot of trouble a few years ago when they said that about inflation. But yeah, I agree. In fact, I'm not even sure we've seen the full effect of tariffs. There was so much pre-buying when it was obvious the tariffs were going to come that there's still a lot of inventory out there that will not be tariffed. When that inventory gets finally used, I expect tariffs to have maybe another mild effect. But right now, what we see inflation 2.6, 2.7, some of the numbers 2.8, 2.9. Once we get above 3.2, then I start to be concerned, and I'm looking at it from a year-over-year perspective. I'm looking at PCE, I'm looking at CPI, I'm looking at PPI. And right now, I think the bigger problem is the employment situation in the U.S. Because of tariffs, people believe that there's a lot of tariffs cause uncertainty. Uncertainty causes companies to decide not to hire as much as they normally would. So what we're seeing right now is a lot of companies that aren't really firing much. They're firing some, but the reality is they're not hiring. And that's the biggest problem for students that are coming out here. I mean, even President Herbert even said in one of his speeches that one of his biggest concerns is college students being able to get jobs. And so that's why University of New England is focusing their efforts on making sure that students are equipped to take jobs and not just on social type issues, but basically being prepared for their job security. And I think that's a very good positive about the University of New England.
Oh, thank you. Yeah, I agree. I cannot agree more. And I believe having experts like Andy on board, we bring the actual expertise from the industry, from the finance market into the academic theory environment of the classes. And this is how we prepare our students. Thank you, Andy.
Thank you very much, Golshan. Nice talking with you.
Absolutely. It's a pleasure.